Hey, hi everyone, it's just Matt here. Today I'll be talking about an overview to personal insurance in Singapore, and we'll be covering on the different types of insurance in Singapore and how it actually impacts us as a consumer. The first thing we want to talk about is what are some of the common experiences with insurance here in Singapore. And it's a topic that people don't like to talk about because it involves death, involves falling sick. We don't want to talk about insurance over dinner, and these are generally quite sensitive topics in Asian culture. So insurance is not the most exciting because something bad actually has to happen for us to actually receive the money. And when we try to read about insurance online, it's like studying rocket science to most people. There's a lot of similar products. There's a lot of confusing, a lot of fancy names, and a lot of technical terms that insurers like to use, which can lead to info overload to a lot of people. Sadly, as a customer, people may end up also meeting the wrong agent or the wrong advisor who pushes a product that doesn't really suit what they're looking for, causing them to be even more skeptical. But that doesn't mean that insurance is not important. Let's find out what are some of the different types of insurance in the next slide. We first have to define what is insurance. It's really just a tool that gives you money when you need it the most. So ask yourself a couple of questions. If we didn't have any insurance, can we afford to fall sick or die? And what would happen to the people who have to rely on us financially? We first have to address a common belief that people have when it comes to insurance. For example, when we go overseas, people tend to buy travel insurance to protect their belongings and cover travel expenses when they're overseas, right? For example, if you also own a car in Singapore, people have to buy motor insurance to protect their car if there's an accident. But, we don't necessarily buy it for ourselves. Ask yourself this question. Is it more important to protect the car or to protect the driver? Do think about it. And sometimes we do tend to put off getting personal insurance because we like to believe ourselves as immortal. The uncomfortable truth is this: no one likes to see themselves falling sick, no one likes to see themselves passing away, and because of that, sometimes we just tend to procrastinate a little bit. Let's look at the first type of insurance in Singapore, health insurance. And health insurance in Singapore is actually made up of two parts. But before we go into that, the whole purpose of health insurance is to reimburse the cost of a hospital bill in Singapore. Alright, so when we look at health insurance, it's made of two parts. The first part is called MediShield Life. This is a compulsory government scheme to all Singaporeans and PRs, and it provides very basic health insurance up to B2 or C ward in the government hospital. The good news is that MediShield Life also covers for pre-existing conditions. So if you had a condition that was diagnosed in the past, you had surgery before, it will still be covered under MediShield Life. The next part of the medical insurance is increasing this coverage to what we call an integrated shield plan. And this is a private health insurance that increases the benefits of MediShield Life. It ups all the limits, it makes it a bit better. However, for the integrated shield plan, it does not cover for pre-existing conditions. So with an integrated shield plan, for example, you now have more options. For example, you can choose private doctors, you can choose to go to private hospitals. You have more options available if you want to get a second opinion. But the whole purpose of MediShield Life is to give you very basic and accessible coverage to all Singaporeans and PRs, and also to cover for any kind of pre-existing conditions. For the second type of insurance, let's look at this thing called life insurance. Life insurance is a tool that actually pays out a lump sum of money if you pass on or you get permanently disabled. For life insurance, there's usually two main kinds in Singapore. One is called term insurance and the other is called whole life insurance. For term insurance, what it does is it provides a very high coverage, but for a limited period of time, for a fixed duration. You choose how long you want to cover yourself for. And usually for term insurance, the premiums are a lot lower, it's a lot cheaper, and there's no cash value, meaning that if you don't make a claim, you've been paying for the last 30 years and there's no claim, you get nothing coming back to you at the end of it. A whole life insurance is a little bit different. The coverage is a bit lower, it's lower compared to a term, but it covers you for lifetime. So you have this lifetime coverage for the rest of your life. And generally, because of that, the premiums are also a bit higher. The premiums are much higher compared to term. And the good news is that most of these whole life plans, you actually pay for a limited period of time. So for example, a whole life plan, you only pay for maybe 20, 25 years, right? You're not paying all the way for the rest of your life. And it also has this thing called cash value. So one day, if you choose to surrender your plan, you can get some cash value that will come back to you. Now, I wanted to address another type of life insurance, and this is what we call an investment-linked policy. And I'm sure some of you may have heard of it. And what this does is it actually mixes insurance and investment together. So it gives you some coverage while at the same time helping you to invest the premiums that you put in. However, from experience, mixing insurance and investment together often leads to complaints, often leads to a bit of disappointment. And what this also means is that as for the premiums, you got to keep paying every single year just to maintain the coverage. So there's no end date, you got to keep paying. So the insurance charges actually increase as you get older. And what this means to you is that you will gradually eat into the value of the investment. So if you wanted a good cash value for this kind of investment-linked policies, it's very highly reliant on the investment performance. You have to choose a very good fund. And unfortunately, this is where we hear stories of people saying they lose money and getting back less than what they put in after having the investment-linked plan for more than 20 years. So in my own humble opinion, I feel it's always better to separate insurance and investment. Don't put them together into the same policy. Let's look at the third as well as the fourth type of personal insurance in Singapore. And in this case, we'll be looking at critical illness as well as disability income insurance. Let's look at what critical illness insurance is first. And the whole point of critical illness insurance is it actually pays out a lump sum of money upon diagnosis of a specified serious critical illness. Usually these illnesses are quite serious. It could be like things like cancer, heart attack, a liver failure, generally things that are a bit more severe. And the whole point of the critical illness payout is to help to supplement your health insurance. So remember, your health insurance works on a reimbursement basis most of the time, meaning that you pay first and then you get reimbursed of your hospital bill once the claim has been approved. However, if your bill is a large bill, for example 50K for heart surgery, where are you going to find the money to pay off the bill first? So in this case, a critical illness plan helps to pay out a lump sum of money for you to pay first, and then your health insurance reimburses you back that full amount. So the main purpose of a critical illness policy is to help to replace your income while you're on recovery and you're not able to work over a period of time. As for disability income, pretty simple. The whole point of this kind of policy is to pay out a portion of your income if you're unable to work due to a disability, and it helps to actually maintain more positive monthly cash flow while you're still on the road to recovery. Maybe you're not able to go back to work yet. At least you have the peace of mind knowing that there's some money coming in every month to help you during this period. As always, if you have questions or you'd like to connect, you actually may scan the QR code to drop me a WhatsApp message directly, or you can also visit my website matthiasyeo.com. I'll put the link in the description below. Thanks again for watching this video. I'll see you in the next one. Bye bye.